Meghan, you raised a lot of great points. Cloud, the build out of 5G, social media, obviously the resupply of semiconductors as one reasons why, at least in hardware, it's going to be a tough short if you're going to try it.
Yeah, Carl, thanks for having me. I totally agree. I think there's a lot of potential negativity around tech, concern around valuations. And as I think about the last year to 2 years of market activity and really the narrative around the tech sector, it's been very rates driven, pandemic related, lockdown related, and more short term. I think as long as you have an investment horizon that is more than 2 to 3 years, which most of the investment community does, our investor base certainly does, you're looking at a really positive tailwinds for technology. One thing in particular that we've been focused on is related to the labor participation rate and really the lack of movement of workers back into the labor force. One of the reasons for that is because we're seeing record number of new business applications this year in 2021. And we see that as a significant tailwind for CapEx and specifically tech-related CapEx as it relates to cloud software, some hardware spending, and then also the social media and ad-based platforms should benefit from that new business activity as well.
So basically, you're thinking to yourself, all the plug-and-play applications you need, in addition to like office equipment, is that sort of the sweet spot in your view?
I do think it's a diversified play on tech, and I'd be very careful around some of the more elevated valuations, call it the top quintile of valuations in the tech sector. But I think as you look around at the economy, we're in a deceleration phase, but our expectation, and we spent some time talking about this in our 2022 outlook, is for the economy to almost reverse back into a reacceleration phase. And in that environment, if you see inflation coming down, you see this new business creation continuing, I think it's a really good opportunity for software, as well as some of that hardware. So be diversified. But the cloud spending is likely to grow 20 to 30% per year from here. So there's a lot of growth to be had. And as long as you can look through what's likely to be some shorter term volatility as interest rates move higher, because our expectation is for interest rates to move higher, I think you're going to get some attractive entry points for some of these more moderately valued tech plays.
Right, and Meghan, when you say that there's positive tailwinds for tech, who's set to really take advantage of it? Is it the mega cap names, or is it some of the smaller, not so small, but these names like Zoom and DocuSign that have seen these valuation resets this year? Who's set to gain if that does continue, if we do see that next year?
Well, some of the larger names, I think, do have clearly that market share, that power to be working through what could be tighter regulations as we move into 2022 and see some of the focus shift back to the tech regulations in Congress, which could definitely happen. And I think those bigger companies just have the deeper pockets to deal with that type of a headwind. I would also say that smaller tech, so you mentioned some of the smaller companies within the large cap space, but it's been really interesting to see how differently the market has played out in small cap space, where small cap tech and small cap growth has really not done nearly as well as it has in the large cap space. So I think there's some opportunity there where valuations are just much more reasonable and there has just not been as much investor flow and investor enthusiasm into small cap tech.